There is a lot of news today we need to cover here in this video, including Tesla specific news. We will look at the option activity, short positioning, and much more. This morning, we had the jobs report that came out, as well as the Michigan Consumer Sentiment Survey, where we've seen one-year inflation expectations that absolutely skyrocketed. But it's, well, a little bit more partisan than you would think. Democratic respondents to this survey expect inflation to skyrocket, while Republicans and independents do not. So you kind of gotta know that to understand the relevance of that data. When you see the headline that I'm gonna share with you, you're gonna say, oh my gosh, we have a huge inflation problem. But when you dive into it, it's not nearly as bad or as solid, concrete data as you would expect. We had a lot of Fed speakers today, and there's a bunch of comments that I will share with you. And well, last but not least, you're getting another rumor of more tariffs coming as soon as next week. While we don't know where these tariffs would be focused, I'm gonna go out on a limb and say this time it could be Europe. Although that's not confirmed and we don't know, it's just a rumor. That's what caused markets to sell off today, alongside inflation expectations, again, which really are not a concern. So ladies and gentlemen, first and foremost, take a look at Elon in the Oval Office last night wearing a giant Make America Great hat again. They are doing some incredible things with Doge, cutting back on the wasteful spending, which is going to be very positive in bringing inflation down. So honestly, it's like, where should we start this video? Because there's so much to get into. But first, I want your opinion on the S&P here. This is a daily candlestick chart of the SPY. And I mean, just look at this, right? 5 up days in a row. Gap down on Monday. 5 up days in a row, gap down on Monday. 5 up days in a row, and well, you're starting the red candle again on Friday. It seems like we're getting these hit pieces, these rumors, this bad news almost every Friday now for the past 3 weeks. And the charts here on the S&P look crazy. I can't say I've ever seen the S&P look so methodical, like repeating itself for the last 3 weeks in a row. So let me know your thoughts on that down below in the comment section. And Tesla stock at the time of recording this video is down almost 2% on the day today to $367.28. As I have said before, you're now in the danger zone, which we could see Tesla stock fall back to the 100-day moving average around $332, $333 per share or so, which in all honesty, at this point, we're kind of already there. That would only be a fall of about 9% from here. You would erase about $34 per share from Tesla. So is it the end of the world if we do fall to 330? Probably not. For those of you guys that want more exposure to Tesla, well, you would love that, including myself. I would love to buy more shares in the 330 since, after all, I do have a year-end price target of over $900 per share. I view that as an opportunity. So first and foremost, earnings last night across the board for some of your important companies like Amazon were not as good as expected. And we will start with this. Amazon, they raised their AI CapEx guidance to $100 billion for 2025. That is actually like good news for the AI story. That should give investors some confidence that AI growth will continue, while ELF dropped about 25% on a consumer slowing down, which kind of made me a little nervous last night. I'm not going to lie, for the jobs report coming out this morning, because if people are cutting back on $5 makeup products, then how can the jobs report show us something good? And in fact, the jobs report did come in on the low side today. I should mention last month was revised up from 256,000 to 307,000. Expectations this morning were for about 170,000 job ads. You came in at 143,000 job ads. So definitely came in on the low side. You missed estimates by about 27,000 jobs. That's kind of telling the Fed, like, hey, we should be thinking about cutting rates here pretty soon. The unemployment rate, although, fell from 4.1% down to 4%, but there's a lot of distortions on what causes the unemployment rate to go up and down. It's not really the best indication of the labor market at this point. Now, you had average hourly earnings that came in better than expected, up a 0.5% versus expectations of 0.3%. Average hourly earnings year over year comes in at 4.1% versus 3.8%. Participation rate did tick upwards to 62.6% from 62.5%. Average weekly hours did fall from 34.3 to 34.1. Government payrolls came in at 32,000 versus estimates of 25,000. Manufacturing payrolls were positive at 3,000 versus expectations of negative 5,000. Now, believe it or not, the non-farm payrolls did not move markets the most today. What really moved markets was the Michigan consumer sentiment. So on the headline number, we came in at 67.8. Expectations were for about 72. So you came in really low on the headline number. But look at this. 5-year inflation expectations came in at 3.3%. That was in line with expectations. But 1-year inflation expectations skyrocketed from an expected 3.4% to 4.3%. I mean, this is the largest increase in 1-year inflation expectations in a very long time. Like, this looks like a hockey stick, okay? But when you actually dig into, the survey here, it's not nearly as scary as you would think. That is because when you actually look at the respondents of this survey, Democrats in green, you can see Democrats' 1-year inflation expectations went to 4.2%. And really, they're about 5.5% after this latest survey. So Democrats' expectations for inflation are surging, whereas that's really bringing up the median here to 4.3%. You can see that independents, which I think is really the best barometer, if you will, of inflation expectations, went up to 3.2 from 2.9. So really not bad at all. And then Republicans have plummeted down to 0.1. So Republicans expect no inflation, almost deflation. Independents expect 3.2% inflation over the next year. And Democrats expect 5.5% inflation. I mean, I think a lot of this has to do with media and tariffs and the news that tariffs were put on Canada and Mexico and they were delayed, and tariffs put on China. I think a lot of this just has to do with media headlines affecting people's sentiment, Democrats' sentiment within this survey. It's not an actual problem that we need to worry about. Now, it was also reported today that President Trump told Republican lawmakers he plans to issue reciprocal tariffs as early as Friday. It's kind of vague because we don't know who is going to be targeted with these tariffs. And since then, we have had a statement from the White House that they're not going to be discussing this today, right? That this could be discussed next week, but we kind of even got a vague answer from them. So a lot of people think this could be Europe, but we just don't know. And that is what did cause this big candle on the SPY, where you fell over 0.5% in just one candle. It was this tariff headline. But again, are we really shocked? This is the third Friday in a row that we have had this tariff news come out at the end of the day that causes markets to sell off. Okay, here's one Friday, here's another Friday, and now this Friday. Fed Goolsbee spoke today as well. He says the jobs report was strong. Labor market is settling into full employment. He's hopeful that tariffs won't hinder trade and comfortable with economy's path. Discount short-term inflation expectations spike, again saying it's really not something that's important. Notes the market sees the Fed hitting 2% inflation target. Expects the policy rate to fall significantly over the next 12 to 18 months. Goolsbee was also asked about some of the comments that Scott Bessent said over the past couple of days, where Scott Bessent has said, well, we're going to lower rates. And a lot of people were like, huh? You know, Trump said this a couple days ago, and people assumed that Trump would be bullying Powell into cutting rates. And, well, Scott Bessent just came out yesterday, I believe, maybe 2 days ago, and said that they're really focused on driving down 10-year treasury yields, not actually bullying the Fed into reducing rates. And I found it notable today that Fed Goolsbee said, quote, I agree with almost everything Scott Bessent has said about the economy and driving down long-run rates and deregulation. Fed Kashkari says the rise in 10-year yields could also be from fiscal deficits. I mean, that's a genius observation, because we all know that. I mean, the Fed is finally starting to understand that the fiscal deficit picture is what caused 10-year treasury yields to rise recently. Well, my argument that I've made in recent days to you guys on this channel is that things like Doge and reducing or set to reduce the deficit are actually causing bond yields to fall in recent days. Okay, besides today, 10-year treasury yields are up about 5.5 basis points. But ever since January 10th, January 13th, right before the inauguration, as Doge was set to begin their cost-cutting operations, you have seen 10-year treasury yields pretty much fall every week since. I mean, you've fallen from 4.8% to 4.5%. 4.49% today. If you're rounding up, you'd round up to 4.5%. That's a 30 basis point drop in 10-year treasury yields. And I think it has to do with Doge cutting government spending and a more fiscally responsible outlook for the federal government. Okay, this will be very positive for stocks, especially if you continue to see 10-year treasury yields fall, as I believe you will. That's going to be a tailwind for markets. And Trump has signed an order amending duties on de minimis imports from China. So some companies look like they will be exempted from the China tariffs. Goolsbee also said today, I think it will take longer than the end of 2025 to get to a neutral policy rate. Fed Kashkari says the Fed will get inflation back down. And again, not to skip over the rest of the Michigan Consumer Sentiment Survey, you did have consumer expectations that came down to 67.3 versus an expectation of 70, and current conditions that kind of plummeted from 74 last month to 68.7 versus expectations of 73. So current conditions came down, consumer expectations came down, 5-year inflation expectations remained steady, but 1-year inflation expectations rose because of that skew from Democratic respondents in the survey. So really, this was pretty good data today from the Fed's perspective, the inflation fight perspective. And short-term U.S. interest rate futures add to losses today. Traders now betting on just one Fed rate cut this year. And I think a lot of that has to do with the unemployment rate actually falling from 4.1% to 4%. And a senior administration official to Trump says the Trump administration is committed to complete denuclearization of North Korea. And the White House says that the jobs data today underscores the necessity of President Trump's pro-growth policies, which obviously is true, but some people would argue laying off a bunch of employees, 40,000 plus government workers, is probably not going to be a good thing for the labor market. But you can also argue there's a lot of positives with cutting government spending and reducing waste. And Trump orders states to halt EV charging programs. Mark Newton, Fundstrat's chief technical strategist, says on X, it's funny that most financial news media are all saying today's sell-off is due to, quote, tariff uncertainty, when much is still unknown and markets have largely been resilient through all this fear. Today's upbeat jobs report ahead of next week's huge supply would be a more accurate answer, or that technically SPX and QQQ had reached the highs of their recent range and some backing and filling was expected. Food for thought. Always question the accuracy of those within the media who try to pin market movement on the latest narrative of the week. And I actually think he's wrong in this. I think markets today are moving lower because of the tariff uncertainty that was announced from the White House. I mean, there was a 0.5% red candle on the SPY when that news came out. But I would agree that next week may have little to do with the sell-off that we're seeing today or some of the tariff uncertainties as long as the situation does not progressively get worse. David Rosenberg says the harsh math behind the jobs data. If you weigh in both the bodies and hours, it's as though payrolls fell 230,000 in January after a 120,000 contraction in December. The built-in for Q1 aggregate hours worked is negative 0.7% on an annual rate, which means that productivity will have to do all the heavy lifting to prevent a negative reading for the current quarter real GDP growth. And apparently the 442,000 jobs allegedly created in Q2 will be revised down to negative, according to the Philadelphia Fed. And look at that, ladies and gentlemen, the EU to offer lower tariffs on US cars. It does look like we were correct in our initial assessments that Europe was likely the area that was going to be tariff next or have those tariff threats, and they are already starting to make concessions for the US, which hopefully turns out something like Mexico and Canada, where we just get slightly better trade deals and there's no actual tariffs that come from this. From a market's perspective, that is. Could also say that is some good news for Tesla, and Tesla's stock today is trading higher on that news. Still in the red, but instead of being down 2%, Tesla's stock at the time of recording this video is now only down about 1.3%. And what's interesting yet again today for Tesla, you're not seeing a wave of bearish option activity from hedge funds and institutions. Again, you have a pretty good day today for option activity. 132 different trades from hedge funds and institutions, totaling $109 million with a positive order value of 65%. Yesterday's end of the day option activity was massive for Tesla. You had 550 different trades totaling $1.36 billion with a positive order value of 77%. So really in the last hour or so of the trading day yesterday, you had hundreds of millions of dollars worth of option activity go into Tesla stock, and a lot of it was pretty positive. Also in the news today, Tesla has increased the price of the Model X by $5,000 in the US, and it no longer qualifies for the $7,500 federal EV credit. All new Model X orders now come with free lifetime supercharging. New prices have the Model X long range at about $85,000 and the Model X Plaid at about $100,000. So Tesla, I mean, it's one of those examples where Tesla can do whatever right now, and it's just not seen as good news. Raising prices $5,000 on the Model X, even if it's only, 10,000 deliveries or so per quarter, should be seen as incrementally positive news. Because presumably just raising prices $5,000 would benefit the bottom line $5,000, as long as all else is equal and production cost or input costs did not move higher. So theoretically, just this price increase alone on the Model X in the US could boost profitability for Tesla by $50 million roughly per quarter, which it's not a whole lot, but it's not nothing either. Divide that by 3.3 billion shares outstanding. That adds about 1.5 cents to EPS. That's decent when EPS comes in the 60-70 cent range almost every quarter. And just for a little bit more math, because we all love math, right? That would add about 2.5% to Tesla's quarter-over-quarter EPS just by this price increase on the Model X. Also in the news today, Tesla has inked a deal with Western Australia to build Megapack servicing facility. The facility which would be used to service, repair, and renew Tesla's battery packs, would be co-located with the NEOM's Kali battery project, one of the biggest battery energy storage systems under construction in Australia, with a final stage capacity of 560 megawatts and 2,240 megawatt hours. The facility is expected to employ up to 50 local workers once it reaches full capacity, and will service Tesla's grid-scale Megapack batteries and other Tesla products installed in Western Australia. The plant will also be able to service residential Powerwall batteries once it's fully scaled up, as well as electric vehicle charging equipment. And Tesla announces on X the Model S and X come with free supercharging. Applies to orders in US, Canada, Puerto Rico, Europe, and the Middle East. And in the news today, Nikola Motors, founded by Trevor Milton, is nearing a bankruptcy filing, according to the Wall Street Journal. Nikola produced more than 80 trucks at a net loss of nearly $200 million. Nikola went public in 2020 when it hadn't sold a single truck before its founder was convicted of securities fraud in 2022 by misleading investors about its zero emissions technology. And this is the company that essentially, in a demonstration to investors, pushed a truck down like a 2% slope without anything actually, no batteries, no acceleration, anything. They just rolled the truck down the hill and claimed that the truck was actually driving. And also in the news today, Japan's Ishiba says we are ready to further our investments in the US, and specifically is noting Toyota, that says Toyota wants to invest more in the US as well. Here on the day today for Tesla stock, hedge funds and institutions are actually taking this dip as an opportunity to cover on some of their short positions. You got about 174,000 shares today that are being returned. Short interest of free float sits at 2.26%, about $23.67 billion sold short in Tesla, totaling 63.23 million shares that are currently sold short. Global inventory numbers for Tesla are falling for the Model Y down to about 14,255. Still elevated overall, but this really just suggests to me that Tesla's slowing down production to revamp their manufacturing lines to start producing the new Model Y, which is, going to be a positive thing for Tesla. Model 3 inventory sits at about 5,500, Model X at 3,500, Model S at 2,100, and the Cybertruck now at about 1,500. And now Trump is coming out with some new headlines towards the end of the day. He says, quote, "We do want to work on the deficit, get it down to even." Trump says tariffs are an option to address the deficit, while he now says that he will announce reciprocal tariffs next week on many countries. Now, I will point out that as long as these tariffs are not on Canada, Mexico, China, or large tariffs on the EU, they're not going to matter as much. If Trump decides to tariff 50 smaller countries, it's not going to, make a huge difference. So that aspect could actually be seen as maybe positive to spread out the tariffs to other countries that may tariff us that are smaller in nature, that we don't do as much business with. Ladies and gentlemen, this is a fluid situation. I will keep you guys updated with any and all new major headlines that come out that move the markets, that move your portfolio. Let me know what you think about all of this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.